The stock market is a marketplace where shares of publicly listed companies are traded. It allows companies to raise capital and investors to own a piece of the company. It plays a critical role in the economy by enabling investment and growth. Why learn about it? It helps with personal financial growth, understanding the economy, and planning investments. The first official stock exchange was the Amsterdam Stock Exchange in 1602. London Stock Exchange was established in 1801. The New York Stock Exchange began in 1792 under the Buttonwood Agreement. In India, BSE was established in 1875 and NSE in 1992. Over time, stock markets have become more regulated and digitalized. Companies list their shares via initial public offering. Investors buy and sell these shares on stock exchanges. Demand and supply of shares determine their prices. Market participants place orders through brokers or online platforms. Retail investors are individual investors like you and me. Institutional investors include mutual funds, pension funds, and insurance companies. Stockbrokers facilitate the buying and selling of shares. Regulators, like SEBI in India, ensure transparency and protect investor interests. Market makers provide liquidity to stocks. The primary market is where companies sell shares to the public for the first time, while the secondary market is where existing shares are traded among investors. Prices fluctuate here based on company performance and investor sentiment. A stock represents ownership in a company. Equity shares offer ownership and voting rights, while preference shares offer fixed dividends but limited control. Shareholders benefit from dividends and capital appreciation. Companies list on the stock market to raise funds for expansion, research and development, or paying off debt. They also gain visibility and credibility, provide liquidity for early investors and founders, and employees can benefit from stock options. To invest in the stock market, open a DMAT account to hold shares and a trading account with a broker to buy and sell. Link your bank account and choose a platform like Zerodha, Upstocks, or Grow. Analyze stocks and place buy or sell orders. An index represents a group of selected stocks and is used to measure the performance of the market. Sensex includes 30 companies and Nifty 50 includes 50 companies in India. Dow Jones, Nasdaq, and S&P 500 are examples from the USA. Indices help investors understand market trends. The rewards of investing include high returns, dividends, and wealth creation, while risks involve market volatility, economic downturns, and company failure. Use diversification to reduce risk and always invest with a long-term perspective. Fundamental analysis involves analyzing a company's financials, management, and industry position using metrics like EPS, PE ratio, ROE, and debt to equity. Technical analysis uses charts, patterns, and indicators to predict price movements, employing tools like moving averages, RSI, and MACD. Investment strategies include value investing, which focuses on buying undervalued stocks with strong fundamentals, growth investing in companies expected to grow rapidly, day trading, and swing trading over days or weeks. There are myths about the stock market, such as the belief that it is gambling, which is false. It's about knowledge, analysis, and patience. Another myth is that you need a lot of money to start, which is also false. You can begin with a small amount. It's also a misconception that only experts succeed. Many retail investors can succeed with proper learning. Real-life examples include the Infosys IPO in 1993, where a Rs 10 investment grew into lakhs, and Apple, where a $1,000 investment in 2000 is worth over $100,000 today. Early investors in TCS, HDFC Bank, and Titan have seen huge returns. Recent trends show a rise of retail investors via mobile apps, algorithmic and AI trading for speed and accuracy, an increase in ESG investing, and the popularity of crypto, though it comes with higher risk and volatility. Stock markets provide opportunities for wealth creation. Knowledge, discipline, and patience are key. Start small, invest regularly, and stay informed. Time in the market is more important than timing the market. Thank you for watching.